Get the show on the road. Oh, why is this like this? I should have had this. I should have had this all set up already. Let's dim our lighting a little bit. All right. Hey, we're live on YouTube, Reed. I'm going to turn you down. Just a little bit. I'm live on YouTube. All right, how's everyone doing? YouTube, how are you? We are with a few other traders in the Discord. What is this? I don't need this pulled up right now. We're gonna detach this real quick. Look at AMD go. And then I'm gonna switch this to speakers. We're gonna detach this real quick, probably a bit loud there, and mute that. All right, we're all set up. In the future, I should have that set up right away, but we're all good now. Everything's set up. You know, this viewed here, we're going to be answering some stuff in the Discord, from the Discord. Everyone keeps talking about natural gas. What's going on with natural gas? Few things going on with natural gas, in my opinion. Well, let's talk about what the expectations were, right? One of the probabilities that I think everyone was excited about, excited is probably the wrong word, but one of the probabilities that people were stuck on is that if there's a cold winter for Europe coming in through this winter, that natural gas prices would skyrocket. There'd be all this pressure on them, and there was a bunch of policies in place that would cause this price squeeze, and that would be a huge problem. It would cause prices to skyrocket, because especially as demand started to increase, as a lot of the issues that were bothering these economies, they started to actually recover, you know, started reopening, etc. None of that actually played out. Now, that doesn't mean the issues have gone away, though. Rather, what happened is Europe spent about, $1.5 trillion to build up their reserves. So, and they also repealed some of the energy policies that they had that was keeping people from using coal and oil. Germany in particular did a lot of this, starting to realize like, hey, we can't heat the country if we keep these policies in place. And on top of that, they decided to just load up tons of debt and to supplement the need that they had, and they built up their reserves. So this has kept prices pretty low, but I think it's artificially low. The fundamentals for a super cycle in energy, which I'm still in the mindset of, and I see UNG as a huge buying potential right now. I talked about in the past, hey, this looks near the lows, and right now it looks like we're pretty much at the lows. If it goes any lower than this, then I'll have to cut and then reassess my positioning. But right now, I think this is the low. This is the time I'm going to get long. Now, when is this actually going to rebound? That's hard to say. You know, the government could always spend more money. And, one of the other things is the weather. It's hard to predict. It was an unusually warm weather. That's the other part is Europe got kind of lucky that they didn't get hit harder than they have been. So, but I think come next year, when next winter rolls around, we're still going to have a lot of these issues. The long term, like setting up a new pipeline isn't something that's going to be fixed really like in any sort of like expedited time frame. This will take time. It'll also probably take developing new trade partners. So I still am very bullish here. I see that the price has come down a lot, and lots of people keep asking about it, but I mean, that's the reasoning for why we see the price action we do that's going on right now. And that's why I'm still bullish though, and I still think our fundamentals here still point to more upside pressure. Same thing, except if we're looking at something like USO or any of these energy companies like Exxon or Mobil, I mean, these have all still look very bullish. The underlying there looks very bullish as well. So I'm still very happy holding my energy. Even though for as far as trading goes, we've done a lot more trading in tech recently. And, you know, we look at stocks like Tesla, Shopify. Those are probably my two most traded right now. Great profits there. I did set up a trade on Under Armour, which I think the underlying there is garbage, but the technicals look great. Excuse me. I think they're... I was talking to some people who were pretty informed about their management structure. It's just trash. And the clothing line's not even that bad, but they're just garbage. Still have a short on Apple, still short on Netflix. Did some straddles on Snapchat and AMD. Those went great. I left my AMD puts open just in case of a pullback. Some of that money might come back. If you have a position, you know, the short side on that's down like 75%. Do I even bother cutting at that point? Not really. I mean, it could bounce back to me. Maybe there's a flash crash or something crazy happens. But do I just want the couple of bucks back when I've already made my profits from the other side of that trade? No, I'm fine just letting that roll out. You know, if you're going for a trade, you cut the losses early to try to manage a trade. That's one thing. But if you go for a lotto play and it goes to 90%, why even bother to cut it? You don't know, something crazy could happen and it actually plays out in your favor and you get lucky. Sometimes you get lucky, but it just happens, like Europe. So, I mean, even right now we're seeing this bounce on Apple. I'll go ahead and switch to this screen. We can see this bounce on Apple already pushing to like some overbought ranges. Still pretty bullish on Apple. I believe that earnings is today or tomorrow. It's tomorrow. Okay. Yeah, so tomorrow afternoon we're going to have those earnings. And I want to keep my short position open into this. Tesla was doing some TA here this morning. And, you know, I'm still seeing... What did TradingView just do to my daily chart? Oh, this is my fib extension. That was throwing me off. I was playing with that pre-made fib extensions and seeing what that was like. Anyways, yeah, I still am looking for 200s on Tesla, 210s, what I have set right now. Still bullish here. Still looking at some of these stocks, though, on the market right now and saying, okay, a lot of these could use a breath. FOMC could be that breath. Could be that downside. Excuse me. And that's what I'm going to be looking for. I would like to go ahead and reset some of these bullish positions. This morning, I ended up taking a lot of profits as well. Posted some of those in the Discord. Some of those were doing great. I actually got a little excited and set up some really far out Tesla longs. Then coming in today, they were already like 50% up or close to it. So went ahead and cut most of those. I'm looking for that pullback. I'll average into some of those and maybe we'll do some live chasing today as well. Remember, the meeting's not until 1:30, and that's when I'll be, you know, see what's on the market, playing things in real time. Maybe we'll talk about some trades or some management of some trades that are already open. And I'm still bullish on TLT as well. I think that's the big ones. NVIDIA is another one. This is another one where bullish here. Did some mapping on the TA here. 236, what I'm looking for. Still looks really strong to me. AMD kind of confirmed some of that strength that still exists in the sector, or at least the market's faith in it. Yeah. And let's see here. looking at questions in the Discord because I thought I saw one. We'll swap over. April 21st, 15 call for UNG. Let me look at my UNG position again so I can answer this question. $10 call June. Oh yeah, the weed stocks have been going crazy. I just don't like. I don't like weed stocks. I don't know. Noob, do you like weed stocks? He's got himself muted. One of the option sellers is hanging out with us in the Discord. Hey, Nib, 1 second. I'm having some issues with... Can you talk again?
Can you hear me?
Yeah, I can hear you. Now I can hear you.
No, I don't like them, but I do think it's a good risk reward here.
I think fundamentally... Let me pull up the MLS chart. What have you been trading? Just CGC?
I have a CGC, MJ, and Tilray positions on. I'm long all of them. I don't think at these prices it makes a whole lot of sense to be short, but they're all relatively small.
No, I don't think it makes sense to be short at all right here.
But no, I mean, weed is kind of like the only industry or class of stock out there that has demonstrated just the ability to continuously go down into perpetuity. It's mind blowing how low this thing is going and can go and continues to go. So, but that being said, I think there's the risk reward is skewed in favor of being long. Like, there's more potential upside than downside simply because the price is already so close to zero. So as far as like the equities option market on something like a UNG, back to natural gas. So equity options, you can do like a calendar spread in the equity options. But with the actual futures product, the calendar spreads are actually built, the pricing differences is built into the actual contract months. So I'm doing calendars in the micro product, because UNG is micro product of natural gas, which is /UG, where I'm basically buying the cheaper close
I like that idea. Sorry, while you're talking, I'm also trying my best to. Let's just do this. This should. Because I'm live on YouTube, so I'm trying to get these settings just right. This should delete the echo because you were echoing. All right, that should eliminate the echoing. I shouldn't have to wear my headset. We should be all good. Nuke, can you talk again one more time real quick?
I put in the AirPod. Is that any better?
Yeah. Well, it's all on my end. It's not you. You don't got to worry about anything. Yeah, so follow Noob Trader on TikTok, everyone. Noob Trader. If you're watching this live or if you're watching this later, sorry for all the technical issues. We should be all set up right now. I shouldn't have to screw with anything anymore. I think everyone missed your trade on the Wii stocks, but the gist is bullish right here. But it's not something I want to play. That's why I even asked Noob about it, because I haven't been paying attention to these. I don't really have much interest in the weed stocks. I think that the tobacco companies, upon legalization, will just clean house. They have the best farmers, they have the best margins, and I think they'll just start growing marijuana and just kill all the other business and actually be able to compete with the big black market, because that's the big thing right here, right now, right? Is that you're not competing with other marijuana companies as much as you're competing with the black market, who's going to undersell you, undercut you. Why go buy it from a local shop? All you need is a medical card. It doesn't matter where you bought it from if you're like worried about getting in trouble. So and upon legalization, none of that will matter anyway. So I don't see how, with the taxes and stuff that go into these companies and the fact that they don't have access to the international banking system, so there's limited growth that they can even see. Legalization, I just think tobacco companies have more cash on hand. They can move fast and they could drive out the rest of the market. So I've been saying that for months and months now. So.
And it's been proven to be true for months and months now. Well, to be honest, it's been proven to be true for years now. I think that's everybody concerned. I think that's why the stock is the whole industry has gone down. It's down like 99%.
Yeah. I mean, it could run up on, hopes, dreams, and copium, but I think I've been saying, yeah, what's up? Ooh.
Oh, yep, I'm here. We don't sound that good on the stream anymore. Sorry to tell you, but.
Yeah, I mean, there's not much else I can do if people want to be able to hear you guys. Is it just quiet, or is the quality just not that great?
Now it's quiet and the quality seemed worse.
Yeah, well, I can't get the computer to just pick it up through the how do I want to do this? I could turn the actual Discord application down, have it on the speakers, do this. Try talking.
Yeah, there's like a 30-second delay on the live stream. I just heard myself talk, and it's very muffled and quiet.
You have are you running like a?
I'm running
audio
OBS,
input
and
capture?
OBS does this dumb thing where if the sound goes through my headset, it won't pick up the Discord. If I play it through my live speakers, it will then pick it up through the Discord.
Okay.
But the only reason
Okay.
is the only
I just heard
issue
myself
with
talk
that.
again, and it sounded clear.
It
Sorry.
what?
I just heard myself talk again from the 30 seconds prior, and it sounded good. Yeah, whatever settings are at right now is fine.
You can hear yourself okay? Nothing. It doesn't
Yeah,
sound
we're all
like
coming
shit.
All coming through clear still right now. Yeah.
All right, good.
Okay, cool. I gotta hop off. I'm still watching the stream, and I'll be typing, but I gotta shave. All right. See ya.
Go shave. the detail we
Fucking
needed.
unacceptable. Unacceptable. Yeah.
All right, we only got 45 minutes to the actual FOMC. Let's go ahead and get these charts back up. What a pain. Too many technical issues. I haven't streamed in long enough. I didn't have anything set up. That was horrible. And I have no water. I have no water.
Especially no bitch with the water.
Reed,
Yeah.
we're live on YouTube.
Hey man, that song's on Spotify. Just saying.
Okay.
Thanks, like God.
So, I guess it would be good. It's good to have some comedic relief, though. People often think this stuff is very boring. What I would love to see on this FOMC, I'm about to get up and get some water, but before I walk away, one of the things I would love to see a nice little quick clean sell-off so that I can get back in and get bullish. I would love to pick up some of these names I like. Tesla, Shopify are big on my list right now. And I would like to see some of the put positions I have print. I'd like to shave those a bit. And then I would love to accumulate back into these bullish positions. And I'll likely take off some of these puts into the meeting. Then we'll kind of see, play the chop. Likely go for some daily contracts on any big moves. And I think if you get 25, though, market likely trades sideways. We'll probably have some big, wild, swings because of the algos and then end up sideways. Then proceed to melt up from there. If we get a 50, that's when I think we get some chop to the, some regular algo trading chop. And then I think we then have some downside and some bleeding. I don't think the bleeding will last. I think the bleeding will persist in tomorrow. I think the Apple sell today has nothing to do with FOMC. I think it has to do with people worried about their earnings. And I think you'll likely see Apple continue to trade like this into tomorrow as well. And I'm bearish on the earnings. I don't have a huge put position at this point, but it does exist. All right, let me get some water. Which one was it? It was called the. Let's see here. And I didn't even bring back my water. Wow. You know what? It's kind of crazy that I don't have a long position on Yeti, considering that I have hundreds of dollars worth of Yeti cups in my house, courtesy of.
Dude, I got lots of Yeti different things, man. You
Yeah.
know what I'm saying?
The girl just keeps buying them. She loves Yeti. Fanatic.
I love that Yeti sketty.
Anyway, I heard that Costco now has some Lulu type clothing for like a fraction of the price. I was actually gonna go up there today after the market closed, may do some shopping because it's time to buy some new clothes.
Yeah.
Time to do some cycling of the sweatpants. Although my favorite sweatpants right now are Under Armour sweatpants. Funny enough. If only that company wasn't a dumpster fire. We can actually pull up that chart real quick. And Noob Trader's the one who should get credit for pointing this out. This gap up that we're seeing play. You see this huge gap down right here? And literally just, this looks like the cleanest, one of the cleanest gap fills ever. You can see it's getting overbought, but looks so bullish right here to me. Looks like we could get a push the rest of the way up, fill that gap into 13. I need to take some decent profits there. Had a very large position though. Coming in, just looks so obvious, you know, down here. It's like you start to see this build up, start to get bullish. We are seeing it turn over on the daily though, so that's why I went ahead, took some profits as well. So be looking to squeeze out some more from that one. And actually, let's see. I mean, SPY's also rolling over on the daily a bit here. Seeing the same thing from Apple. Tesla still looks like a monster, though. Might have just been able to leave those Tesla calls open. They were long positions, a month out. Likely didn't need to worry about those much. So we got about a half hour before we get the Fed news. Pull this over. Pull this over. There we go. See, I'm learning to be faster now. All right, we got this in 4 minutes. Oh, some good back pops. Oh, that was wonderful.
Yeah, back pops. Yeah. I can get nasty with it.
Noob, you still here? Did we lose one of our traders?
Yes, sir.
No, he's still here. He's still here.
I'm just looking at things, trying to get situated.
Oh, what's this from OpenAI? Interested in access to ChatGPT Plus? Sign up here. Oh, I don't want my email to be whatever. Please don't blow up that email or that one. I'm such a freaking noob. I like to stay updated on everything this is doing. Sweet. Let me know when it's up. Just use Google Forms. I love it. All right, we got 2 more minutes. I love ChatGPT. This thing's been so much fun to mess with. You can back test strategies for it. It'll do it for you. As far as the Discord goes, I made a bot that plugs to ChatGPT 3, and so people could just ask questions to it right in the Discord. That's been super cool because it's allowed me to get rid of a lot of this education that is just like basic stuff, you know, instead of going to the education and reading about it, people can just quickly ask ChatGPT about it. So eventually I'll get rid of more of these like terminology and stuff like that. There's probably no longer a need for this. I just haven't deleted it yet because this stuff took me hours and hours to set up and plug it all in and type it up. But you know, there's no real need for it now that there's an AI in the Discord that can just answer all the basic questions. Another thing we just added to the Discord is this investing channel as well. This was requested by our local hedge fund manager, Joe the PM. He wanted this so he could just post about long positions and investing and stocks he likes, because he doesn't do as much option trading as we do. So that was a nice addition to the Discord, I think, for a lot of users who aren't as big of option traders. So happy to see that. More than happy to do that. By the way, if you aren't in the Discord, the free viewing on a lot of these is about to go away, about to just go right back to, you have to be a subscriber if you want to see this stuff. All the option plays, the option chat and stuff like that still hasn't been available for people who don't have the subscription. But I've left the contender chat open for months now. And it helps to just help people. And, you know, we've been on fire lately, doing very well. So if you want to check that out, there should be a link in the description for the stream. Happy to see you there. So numbers should be out. I'll go back to the daily chart. Big sell-off on the interest rate decision. What's our number? $25 and still got a big sell-off. Great for my puts. Let's see where those are at. Looks like a lot of the volatility got murdered on that. I was too slow. I was talking too much. The bounce back came in quick. I would have loved to snap that quick drawdown.
Chance. I'm just looking at my S&P position, and just based off of what premium is doing.
You're really choppy, noob. Say that again.
I'm just saying, I'm looking at my S&P position.
Yeah, I'm coming into this short. Boys are
based off of just a short premium position. I'm making a fair amount of money. Now we are going down. Premium is also getting crushed in the S&Ps.
Yeah, but a lot of it just came back. I'm going to go ahead and take some of this off because now I'm up like 20%. And I just saw how much it can swing. Let's see if I can get... Well, let's see if I can get some patience here, because it's moving now in my favor in a much better way.
It's still really choppy.
Yeah, but let's see if I can sell at the upper end on the chop. I did. There we go. We're just going to take some of that off. I want to see what nail looks like. Shop at 48 AMD. I gotta keep updating this so people can see what I'm seeing. Pretty sure I can do. Why is that showing that? It shouldn't just show two of the same screen. How about that? How about that? All right. Worst trading stream ever. This dude goes live. It just messes with the setup.
So I'm also legging into these natural gas calendars. Like I have working orders to buy some more of these natural gas calendars if we continue to see the disparity widen or the spread widen between these front months and the back months. I'm going to continue to buy these spreads up.
I mean, I'm just long here. And in fact,
well, I'm long too. I'm long natural gas, just straight long. But I also think that this is the way that you can play this price action against itself with just solely getting exposure to the time. So, or meaning the spread. So you're just trading the spread if you're doing it this way. And the spread is very wide. It's nothing but widen and widen and widen for into this down. To the point where it's like the spread is 50 cents. Like that's where or almost 50 cents. Which for natural gas, that's a huge spread.
just walk through a freaking turbine. Yeah, I'm buying up. More UNG right now. We're doing this on the tablet.
I'm not sure what's happening, but my P&L is on the move. We must be coming in. Are we rallying and vol contracting?
Looks like a rally, yeah. Glad I took some of those puts off. Think that was a move. I don't want to move on any bullish positions until now we get Powell talking. So, yeah, volatility it's headed towards 19 right now. About to break the lows from yesterday.
It's getting wacky pooed. That's the technical term, is wacky pooed.
Agreed. Yeah, that's what I hear people say all the time. What was that? Did I just try to buy this in the wrong account? I just tried to buy this in the small account.
Not enough buying power.
Yeah. Whoops.
So you've got tech right now leading the whole market higher. Dow is still down like 0.75%. And tech is dragging everything up by its bootstraps.
All right, yeah. Just loaded up that UNG and all the accounts. Bought some more. We're even more long.
Yeah, I sold puts in there today.
Did you even get any real premium on that?
Not a lot. I mean, yes, the implied volatility in there is decent. In relation to itself historically, I think it was in the 50s percentile. So it's as good of candidate as anything else out there that you're going to sell. Almost 70th percentile, 66th is the IV percentile. So it's a higher level of implied volatility than it's been for the vast majority of the last year. It don't get juicier than that. Well, it can, but it frequently does not. It doesn't usually get much higher than it currently is. Which makes sense when you've got like a 10% move in a commodity, which was preceded by God knows how many other 10%.
You're going full robotic again.
For the last 2 months.
Yeah.
I'm gonna mute myself.
Volatility's dead in the water right here. Let's look at these contracts on SPY real quick. Applied volatility's dropped to 8%. Not really pricing in much of a move right here at all. What, you're pricing in $2 move? Less than that from here. 407 to 405, the 403 range. Right here. This should even dip below the bottom of the range. Technically, you're looking at this 403.27 right here. And then top near 407 is what options are pricing in. There's probably be some money to be here if you want to take the risk of playing one side. Nothing seems decided right now, though. And typically, I don't like to come in a bit too early. I just like to play the move that comes in. Although today we did. And on that first drop down, immediately sold because pretty much got lucky because we saw the huge volatility drop off, kill the premiums. And then that ended up bouncing back, put my trade decently positive, like 20%. Went ahead and just took that off. We could see this drop down, but I mean, just look at all that momentum right here on the upside. So when Powell starts talking, we'll see how it goes. Usually, Powell loves to talk too much. Market's usually really happy at first, and then he just talks too long. When we get a bit of a sell-off there, should be some opportunities. I think it could technically come in short right here and do pretty well, though. Just before he talks, in the anticipation that he'll talk too much, then when he's gone, market will go back to being fine. I think nail looks like an interesting short. Had a nail short. I also closed that when this came down. And I actually should. And actually, let's let Twitter know. Here you go, Twitter. This is what I did. Minutes. We got 14 minutes until he comes live. Looks like if you came in short right there, you'd be doing pretty well right now. We're also seeing this roll over. It's not done yet. Probably could come in here. What? We're only pricing in. Yeah, premiums are coming up a little bit. Still pricing in only $1. I mean, you could probably get some decent risk if we came in here for the 400s. 49 short term. Look for a move. If you get 402, what you get? You get about 115% off that. That's pretty good. Probably piddle here, buy up some of these. See 102,000 volume coming in on that too. Look at that. Juicy. Fill me in here at 5.5. Thank you. So sometimes you just have to ask nicely. URI is getting tons of bearish flow right now. I'm not really sure what that is. Looking at the stock, looking at the option tracker right now. if you want this tool to track tickers and then just get like a snapshot of flow, this is just plug and play into TOS, Thinkorswim. All you have to do is ask in the Discord. We have several different tools like this. We have another one that tracks TTM squeeze that notifies you whenever the TTM squeeze is firing on both the weekly and daily, which is usually a very high percentile of it playing out in your favor. A great way to signal that you're near a top or a bottom and there's a big move on the way. We have different tools like that. And all you have to do is ask in the Discord. You don't even have to be a subscriber. We just share stuff like that. But always have this open on the other screen as well. Just every day when I'm trading. Market continuing to just chop right here. I still like where we're at on positions. I'm still accidentally clicking stuff. Just remove that for now. Let's look at this meta charting real quick. It's not extending to 2. We have a complex 4. This doesn't look like where it's going to play out.
I've installed it and I filled up, the basic information about what I know about it. But as far as who needs access to it,
Hey, Reed.
he just told me to point you guys to him.
These guys that hang out in the Discord working from home, forgetting to mute themselves when they get in work meetings. This is near the 402. I don't know what I had marked there. Maybe I had moved it at some point on accident. Oftentimes when I'm scrolling through this, I do exactly that. But that's pretty much at your retracement here. I would expect Facebook to come down a little bit more now. If this is the correct chart, that comes out there perfectly. Let's check the extension here on the 3rd. Oh, I just did that backwards. Make this here. Yeah, some of this got moved around because this is all goofy right now. And that would mimic the wave 1. 5 should mimic 1. 4 should never retrace into 2. The 3, 8, 2 is the most common retracement for the 4. 3 should always be the longest. These are some of the simplistic rules of Elliott waves. If you do a parallel channel here, from the 1 to the 3, 5 most likely to end in the center. And that kind of looks like what we're looking there for here. If you do this on a longer time frame, call this wave 1, 2, 3, 4. I mean, spot at Shopify. Joe the PM, who's one of the portfolio managers that hangs out in the Discord, has Shopify going to 112 this year. So, and he's good. He's got a very solid track record. We're very lucky to have him in the Discord. His longer time frame analysis is really great. It's not much of a short-term trader, though. That's more of what I do as far as being a buyer. This might fire to the downside. Give us another look like this. I don't need to use volume here, actually. Just show me it on the screen. Not much, but piddling. We got 7 minutes till Powell comes up. Let's go ahead and get ready for that. That's crazy. This is like the third option down. Does Meet Kevin? Meet Kevin does better than the actual conference. It's got almost double the views the actual Federal Reserve has. Look at all these people that are live. Traveling trader. Interesting. Gotta immediately pause. Okay, it's already muted. Whoever made the music for this loves to tag the video and get it taken down because of the music copyright. I had no clue they were so competitive for the elevator music that is played. This is pretty interesting on the 1 minute. Are we getting a little wedge right here? Is this what we're going to see play out? It's a little tighter than that. Something like this. That just brings us to our trend line that we've had for ages. I mean, we've been dancing around this for who knows how long. Every time it breaks this, we get pummeled back down. If we get a significant break here, market goes to 420, then we'll probably rephrase. I've heard some people say 440 will be top in the short term heading into summer. After summer rolls around, then have some lows come in. Lots of people think it could melt down even sooner than that. I think it's important when you hear these analysts and stuff say new lows are on the way. They're not being very clear about their time frame, right? But lots of these people like to speak on the time frames, multi-year time frames. And then you hear people that are like, next week it'll be violent crash because they said this. And I'm like, yeah, but what? They didn't specify what time frame they were talking on. And that's always worrisome to me. It's also, I think, appeals to a lot of people's lizard brains as well. To just constantly be like, be worried about this, be worried about that, be worried about this. Never have debt. Debt is bad. You can never have debt. And the lizard brains are like, yes. They love it. Like all the lizard brains that hated Nobel, Mr. Beast. Great man. Maybe I'll make a little short about what happened with him. Stupid. Stupid, stupid, stupid. Imagine premiums are getting slaughtered right now. Holding up. Pretty good. Pretty good entry. It's not that bad. We get a good move here. This will print in the direction pretty well. And the Apple contracts held up great through all of that. Apple still just looks like it's, yeah, just middling near here the lows. These technicals do not look good. All right, we got.
Just got filled in more of those natural gas contracts. The spread continues to widen. You can buy them for even cheaper now.
You're loaded. Loaded up. They didn't put anything about Russia, Ukraine in here anymore, or the higher food or the energy prices. They just summarized it as elevated global uncertainty. Let me get this posted up on stream. They're also live right now, but they're not going to say anything, so let me throw this up in the Discord real quick. And then we'll talk about it. If you're wondering what I'm doing, that's not what I just... Stop that. Stop that.
Good afternoon and welcome. My colleagues and I understand the hardship that high inflation is causing, and we are strongly committed to bringing inflation back down to our 2% goal.
I'm paused up now, so I'm not going to bring it up. But I just posted that in the Discord from the minutes, if anyone wants to read it.
We've covered a lot of ground.
It shows you what the old minutes was, what the new one is, what changes have been
yet to be
made.
felt. Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing
We'll snag that
developments.
46% right there.
The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated.
Remember we talked
Job
about
gains
this
have been
TT and
robust,
squeeze
with
rolled
employment
over.
rising by an average
How
of
dramatic that move is.
247,000 jobs
It's
per
going
month
to keep
over
going
the last
too.
3
We could
months.
take some more profits here.
Although the pace of job gains has
Almost near
slowed
100%
over the course of the
returns
past
now.
year, and nominal wage growth has
98%.
shown some signs of easing.
I'm going to sell some
The labor
more.
market continues to be out of balance. Labor demand
Look at
substantially
that.
exceeds the supply of available workers, and the labor force participation rate has
Now
changed
getting
little
into some
from a year ago.
oversold territory right here. I'm going to go ahead and close
Inflation
the rest of these
remains
out.
well above our longer run goal of 2%. Over the 12 months ending in December, total PCE prices rose 5.0%.
I'm having some trouble getting filled right here.
Excluding the volatile food and energy categories, core PCE prices rose 4.4%. The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases.
I mean, that was
And while
beautiful.
recent developments are encouraging, we will need substantially more evidence to be confident
Let's
that inflation is on a
close some of
sustained downward
these.
path.
Closing some Netflix
Despite elevated
puts.
inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation
Post came right
continues,
back.
the greater the chance that expectations of
UAA
higher
position.
inflation will
UAA
become
position's
entrenched.
holding up well right now.
The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American
Pretty
people.
unaffected by this.
My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation.
Didn't have to do.
We are highly attentive to the risks that
Didn't have to do anything fancy there. We just made 100%
strongly committed
off those puts. I also sold some Netflix puts that were doing well as well. I took some Airbnb off as well.
The target range for the federal funds rate by 25 basis
Look at
points.
that. Gorgeous.
Bringing the target range
Gorgeous.
to
New low right there.
4.75%.
And look, see that red candle right there on the TTM squeeze? It's like a dark purple. It's not really red.
Today's action, we have raised
Starting to
interest rates
build
by
back up.
4.5 percentage points
So
over
just keep an eye on that. Looks like a double top. Looks like we could see some rebound right here.
Increases in the target range for the federal funds rate will be appropriate.
Alternatively, we could roll some more puts if we see that actually break. See, where's the seeing the breakup? I was about to say if we do see it continue to drop below that, maybe it's going to get really dramatic.
Sectors of the economy, particularly housing. It will take time, however.
We just rallied 10 points in like 10 seconds in those SPOOs.
Especially on inflation.
On what?
In light of the cumulative tightening of monetary
SPX.
policy and the lags with which monetary policy affects economic activity. And
I mean, that was beautiful. I don't even need to trade anything else really. We just
25 basis
killed
points
it.
today, continuing the step down from
I did.
last year's rapid pace of increases. Shifting to a slower pace will.
That was a quick 100% in and out. Sold the first batch 46%. The rest of it was a little under 100. Some of those were a little hard to sell, but took profits on all the puts.
The whole thing is kind of looking like a big fat nothing burger, just some chop.
Totality of
Nothing more.
and their implications for the outlook.
Yeah,
for
25.
activity and
Which, by the way, if you go to the beginning of the live stream, if you're here at the beginning of the live stream, what did I say? If there was 25, likely see some choppy moves from algos, and then what you're going to see after that,
back down to our 2%,
likely flat.
and to keep longer-term inflation expectations well anchored.
Guru. We'll just listen to Powell for a bit.
Inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
The NASDAQ was just down 80, now it's up 15.
To achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
The NASDAQ is really looking relatively strong. Tech was the only, tech was dragging us higher before and it's doing it again.
Since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market posted a solid gain in January. Does that make your job of combating inflation harder? And could you see lifting rates higher than you otherwise would to offset the increase in, or to offset the easing of financial conditions?
Risk on.
It is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Rachel.
Volatility futures just got whacked by like 40 cents.
Hi, Chair Powell. Thank you
a matter
for
of
taking our
a
questions.
minute and a half.
Siegel from the Washington Post. Over the last
Yeah, look at
quarter,
that.
we've seen
We're
a
testing
deceleration
19 right
in
now.
prices, in
I think
wages,
I
and
can
a
pick
fall
up some
in
Tesla
consumer
calls
spending,
here.
all while the unemployment rate has been able to stay at a historic low.
Here,
Does
look
this
at
at all
some
change your
longs.
view of how much the unemployment rate would need to go up, if at all, to see inflation? come
Probably
down to
just
the
actually
levels
go
we're
to the
looking
big
for?
count and load up
So I would say it is a good thing that the
some more of these again.
disinflation that we have seen so far has not come at the expense of a weaker labor market. But I would also say that disinflationary process that you now see underway is really at an early stage. What you see is really In the goods sector, you see inflation now coming down because supply chains have been fixed. Demand is shifting back to services, and shortages have been abated. So you see that in the housing services sector. We expect inflation to continue moving up for a while, but then to come down, assuming that new leases continue to be lower. So in those two sectors, you've got a good story. The issue is that we have a large sector called
I just set this
non-housing
up. I'll share
core
this with
non-housing services
everyone.
where we don't see disinflation.
Went ahead and bought March
But I would say
17th,
that,
200 call for
So
Tesla.
far, what we see is progress, but without any weakening in labor market conditions.
Has your I'm sorry.
Go ahead.
Has your expectation
And then I'm
for
gonna
when
get some
unemployment
shorter
rate might
term.
go changed since December?
You know, we're going to write down
We're looking at some
new
weeklies.
forecasts at the March meeting, and we'll see at that time.
Even
I
the
would say that
ugliest
it's
of all the
gratifying to see
commodities
this
is getting
inflationary
a
process
tiny bit of a
now
bid.
getting underway, and we continue to get strong labor market data.
I don't know. I feel like the market thinks
you know,
all the
we'll update those
commodities are
forecasts
ugly
in
right now.
March.
Neil.
That's me. I think they're beautiful.
Hi, Chair Powell. Neil Irwin with Axios. You and some of your colleagues have emphasized the possibility that job openings
Gold
could
got
come
a
down,
bid.
and that would let
Silver
some
is
air out of the
flat
labor
on the
market
day
without
after
major
being
job
down
losses.
1%.
We saw
Why
the
is
opposite
gold
Even
getting a
people-
bid?
this morning. Job
Even
openings
people are
actually
buying
rising,
that nasty
and
oil
also
stuff.
coincided with slowdown.
Can we please
Do
get
you
somebody
believe
to
that
buy
openings
some
are an
freaking
indicator
natural
to be
gas?
studying to understand where the labor market is and where wage inflation might be heading?
So you're right about the data, of course. We've seen average hourly earnings, and now the
Start filling your
cost
pockets with
index
that shit.
abating a little bit, still off of their highs
Get a
of 6
portable
months
tank.
ago and more, but still at levels that are,
I'm
that
gonna
are,
wait
that are
a little
fairly
a moment on
elevated.
some of these more short term.
The job openings number.
Look at
has
that
been-
rally.
has
I should have
been
moved
quite
faster
volatile,
on that.
recently. Yeah,
I should have
did see
came
that
in
it
as
moved
soon
up
as we
back
saw
up
that
this
dark
morning.
candle form right there.
I
You
do
could have
think
easily
that,
just come in and bought
it's
some
probably
calls.
an important indicator. The ratio, I guess, is back up to 1.9.
I was too hesitant.
Job openings
Right here,
to,
can't. I don't like
to
entering
unemployed
short-term
people.
calls
People
here.
are
But
looking
look at that
for-
range. We were talking about
So
this earlier.
It's an indicator.
We saw
but
the,
nonetheless, you're right. We do see wages.
403.
moving
I mean, this was technically
If you look
over the
across
range, but
rest
we
of
had the
labor market, you still
402,
see very high,
47. This is what
payroll
options
job
had priced
creation.
in was a $2 move potential
And,
right here. So
quits
this
are
is
still at an
likely
elevated
top bottom
level.
of the
So
trend line right
by
here.
Many indicators, the job market is still very
Just
strong.
like we talked about just a few hours ago. Now it's likely top, chop right back down.
Thank
Algo's
you.
going
Colby Smith with
wild.
the Financial Times. Given the economic data since the December meeting, is the trajectory for the Fed funds rate in the most recent SEP still the best guidepost for the policy path forward? Or does ongoing now mean more than 2 rate rises now?
So you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be, and that's obviously back in December, and the median for that was between 5 and 5.25%. At the March meeting, we're going to update those assessments. We did not update them today. We did, however, continue to say that we believe ongoing rate hikes will be appropriate to attain a sufficiently restrictive stance of policy to bring inflation back down to 2%. We think we've covered a lot of ground, and financial conditions have certainly tightened. And I would say we still think there's work to do there. We haven't made a decision on exactly where that will be. I think, we're going to be looking carefully at the incoming data between now and the March meeting. And then the May meeting.
NASDAQ strong like bull.
I don't feel a lot of certainty about where that will be. It could certainly be higher. than
breaking
we're
right
writing
to the
down now.
upside on that.
If we
This
come to
will
the
keep
view that we
going.
need to write down
Yeah.
Look at that.
to move
Like a-
rates up
You
beyond.
think we hit 410
Going
today?
on a
Certainly
trip
do that.
and a
At the
favorite
same
rocket
time, if
ship.
the data
We
come
could hit 410
in the other
today.
direction, then
Tesla
we'll
gonna
make
hit
data-dependent
180?
decisions at
410,
town meetings, of
180
course.
coming in.
Just as a quick follow-up,
percentage
how
up
are
is
you
this
viewing
right
the
now?
kind of balance
Futures are
risk between
already
those
at
two options?
41.
Woo! I hope no one held those
Likelihood of
puts because you're
maybe
getting
falling short of that
slaughtered right
going
now.
Beyond that level.
I guess I would
Wacky
say it
pooed.
this way.
Wacky
I continue to
pooed.
think
What just happened?
it's very difficult to manage.
Like
Nothing really.
something in my
Do
account
it
just
to
exploded.
and
What
find
the
it
hell
in
just
6 or
happened?
12 months
Oh,
to actually
that would
close,
be
but
Under
get the
Armour.
job done, and inflation springs back, and we have to go back in. And now
Under
we
Armour,
really do
just
worry
like-
that expectations getting
Wow.
unanchored and that kind of thing. This is a very difficult risk to manage. Whereas
It's only
of course, we have no incentive,
What
no
happened?
desire to over tighten, but
Oh, no, my
if
premiums
we
just shot
feel
up
like we've
10%.
gone too far, we can certainly.
Yeah, the
certainly
calls
inflation
just
is
got a
coming down
bid in
faster
Under
than we
Armour.
expect. Then we have tools that would work on that. So I do think that in this situation where we have still the highest inflation in 40 years, the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation.
Oh, you know who's lagging and looks juicy right
We
now?
don't see it. It's not happening yet. Inflation in core services.
Don't you say oil.
Is still running at 4% on a 6 and 12-month basis. So there's not.
I'm not going to say oil.
And the other two sectors representing
looking at oil.
less than 50%.
I'm
you
looking at
actually, I think, now
Shopify.
have a story that is credible, that's coming together. Although we don't actually see disinflation.
But I'm already long
housing
it,
services,
so
but it's in the
I'm
pipeline.
okay with this move. I'll allow it.
For the third sector, we
Look at
so
Roku.
I think
Roku shot
it
up
would be
like
premature-
$2
it would be very
on this.
premature to declare victory or to think that we've really got this. We need to see, our goal, of course, is to bring
no.
it
Telling you, tech is just dragging this whole market higher.
There are many factors driving
I'm going to
inflation.
sell all my
in that
Roku
sector,
stuff.
And they should.
That's probably a good, that's probably a good
inflation,
idea.
The disinflationary process.
This thing looks
again in that sector.
like it's gonna
So
be-
far we
I don't-
see that. And I think until we do.
Everybody's
we see
like,
ourselves
the
as
price
having a
targets
lot of
that
work to do.
these analysts came out for Roku and cut Roku's price targets down to like, we're already 50% above the price target on some of these guys.
Made a number of
I think I saw a price target of 40 or 45, if I recall correctly, for Roku.
Has eased, that's new.
Set up a small long on shop. Nothing short term right now. Nothing short term. Small long.
Eliminated
in
all
month.
the reasons that you said prices were being driven higher.
Not
Premium is getting wrecked, man. It is just getting sucked out of this market.
Still have ongoing increases to come. So I'm wondering, why is that the case?
You got the
Does it have more
dogs
to do with
that are
uncertainty
leading
around the
this thing
outlook,
forward.
or
Like,
more
you
to
got
do with
DocuSign
the
up
idea of
$2, things like Roku,
to get ahead of itself?
your Shopify's. I bet you Snap's even up. Yes, Snap is rallying.
I mean,
Let's say it this
Apple
way.
went ahead and was
we can
climbing
now say,
over
I
the
think, for the
pre-market
first
right
time,
now.
That the disinflationary process.
Woo! What a
We can see
base
that, and we see
ripping
it
rally
really
to
in goods prices so
410,
far.
dude. Look at that
Goods prices
410.
is a big sector. This is what we've.
Amazon is at
Yeah,
105.
yeah, your VIX is
actually
at
happening, and for the reasons
1841
we
right
thought.
now.
It's supply chains, it's shortages,
Woo!
and it's demand revolving.
Disney can't do anything to
So
save
this
itself,
is a
though.
good thing. This is a good
It's
thing.
only up 35
That's,
cents.
around a quarter of the PCE price index, core PCE price index. So the second sector.
Disney is a pig,
housing
man.
services, and that's driven by very different things. And we, as I mentioned, with housing services, we expect, and other forecasters expect, that measured inflation will continue moving up for several months, but will then come down, assuming that new
Look at
leases-
freaking AMD on the day.
And we do assume that.
It was
we think that
already
that's
up
sort of in the
9%.
pipeline. And we actually see
Now it's up
disinflation
12%.
in the goods sector, and we see it in the pipeline for two sectors that amount to a little less than half. So this is good, and we note that when we say inflation is coming down, this is good. We expect to see that disinflation process will be seen, we hope soon, in the.
It's all the pigs. You got to firm up another dollar.
Sorry, the core services ex-housing sector.
We
that I
actually
talked
got to
about.
roll puts up in
We don't
that
see
stock.
It's 7 or 8 different kinds of services, not all of them.
I mean, I think at 410 you get rug
We have a
pulled.
sense of what's going on in each of those different.
I mean, you're
subsectors.
gonna get rug pulled right here.
Probably
I
the
think I
biggest
could buy
part of it,
some
probably
puts at a
60%
discount right
of
now.
that is,
Probably buy these for
research will
tomorrow.
show is sensitive to slack in the economy, and so the labor market will probably be
We'll
important.
go
Some of the
Friday.
other
I don't
ones,
like buying
the labor
Thursday
market's not gonna be
contracts.
important. Many other factors will drive it. In any case, we don't see disinflation in that sector yet, and I think we need to see that.
I'm not
It's the
gonna. I want
majority
like a
of the core
2.5 delta.
PCE
I want like
index,
the
which is the thing that we think is the best
403.
predictor of headline PCE, which is our
2.3 delta.
mandate.
That's close enough.
So it's not that we're neither optimistic
big
or pessimistic. We're just
buyers
telling you that we
on the
don't
405
see inflation moving
puts
down yet in that large sector.
right here.
I think we will fairly soon, but we don't see it yet.
410,
Until we do,
76
I
RSI.
think
that
we
TTM
see
squeeze.
ourselves.
Look at that
We got to be
TTM
honest with
squeeze.
ourselves. We see
Holy.
ourselves as having perhaps more
I don't know
persistent.
how well
we'll
stream
see,
can
more
see that,
persistent
but-
inflation in that sector, which will take longer to get down. And we're just going
Yeah,
to have
I'm
to.
coming in. I'm
We have
coming
to
in.
complete the job. I mean, that's what we're here for.
Right here. I'll let the big boys play with the 405 if they want to. I'm gonna snipe some for this 403.
You observed several
We
years
now
ago.
got the
You learned we
my
can control
my
unemployment rate.
appropriate delta, manage my risk a little bit. Playing this with the small account, not the big account.
From its uncomfortably high level, despite a historically low unemployment.
This is pretty pricey for the small account. Bought that for like 140.
Why do you think further rate increases are needed? Why not stop here and see what transpires in the coming months before raising rates again?
So I don't want the delta to be too much because I don't want to lose
we
half
raised
the
rates
contract
4.5%, and we're
on
talking
a
about a
spike
couple
to
more
412. Let's
rate
just look at
hikes
this a little bit
to
better.
get to
See
that
what
level
we
we
got.
think is appropriately restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long and variable lags, and we're thinking about that.
Where's that at?
It really, the
414,
story we're telling.
How am I banging bids and still not getting filled?
And the way we understand it is basically the three things that I've just
414 looks like what you're looking for
and
next.
again, we don't see it affecting the services
Give me
sector
this.
ex housing yet.
It's like a
But,
perfect
I
top
think
right here. It's a
our
bin,
assessment is that we're not very far
and you're looking to
from
fill
that
this
level.
if you break through here.
We don't know that, though. We don't know that. So I think we're
Look at the
we're living in a
30-minute.
world of significant uncertainty. I would look across the rate, the spectrum.
Oh,
of
look at
rates
that,
and see
actually, and look how
real
nice
rates
that
are now
looks.
Positive, right, by an appropriate set of measures are positive
So you
across
get the
yield
pop
curve. I think
here.
policy
We're
is
looking for
restrictive. We're
retracement
trying to
down
make a
and then
fine
back
judgment
up.
about
Looks like
how much is
you're going to be
restrictive
looking
enough, that's all.
for.
And we're going to, that's why we're slowing down to 25 basis points. We're going to be carefully watching the economy and watching inflation and watching the progress of the disinflation.
Wait, let me draw this differently.
Did you or your colleagues discuss
Let me just draw.
the conditions
Looking for a
pause
retest here,
at this
and then you
meeting,
would be looking
this week?
for up to
You'll see that
420.
the
Be
minutes
looking
will
for
come
up
out in
here.
3 weeks, and we'll give you a lot of detail. We spent a lot of time talking about the path ahead and the state of the economy, and I wouldn't want to start to describe all the details there, but that was the sense of the discussion, was really talking quite a bit about the path forward.
Victoria. Hi, Chair Powell. I wanted to ask about the debt ceiling. Given that we've now hit up
Let's leave
against
this
it,
15-minute
I was wondering
open.
if the U.S. goes past the
Debt
X
ceiling.
date,
I actually want to hear
will
about
the Fed
this.
do whatever the Treasury directs as it relates to making payments as the fiscal agent, or will it do its own analysis of any legal constraints?
So your question is, say your question again?
Will the Fed do what Treasury directs as it relates to making payments, or will it do its own analysis of any legal constraints?
So you're really asking about, you're asking about prioritization, in effect, is what
Yes,
you're, okay.
yes.
So I feel like I have to say this. There's only one way forward here, and that is for Congress to raise the debt ceiling so that the United States government can pay all of its obligations when due. And any deviations from that path would be highly risky, and that no one should assume that the Fed can protect the economy from the consequences of failing to act in a timely manner. In terms of our relationship with the Treasury, we are their fiscal agent, and I'm just going to leave it at that.
Are you actively doing any planning of what might happen in the event that would happen?
I'm just going to leave it at that. This is a matter that's to be resolved between, it's really Congress's job to raise the debt ceiling, and I gather there are discussions happening, but they don't involve us. We're not involved in those discussions.
There's a rolling over on the 1 minute. I didn't mean to pause that.
Thanks for taking our questions. I wonder, was there any discussion today of the possibility of pausing rate increases and then restarting them? Lori Logan from the Federal Reserve Bank of Dallas seemed to suggest that would be a possibility in a recent speech, and I wonder if that view is broadly shared on the committee.
So the committee, obviously, thing to do at this meeting was to raise the federal funds rate by 25 basis points, and we said that we continue to anticipate that ongoing increases in the target range will be.
Okay, I'm going to go to the bathroom real quick.
stance
We have
of
the still position
official
open.
restrictive monetary
Everything looks
policy
fine at
that
the
will bring
moment.
inflation down to
Don't
2%.
nuke while I'm gone.
That's the judgment that we made. We're gonna write down new forecasts in March, and we'll certainly be looking at the incoming data as everyone else will.
Sorry, I should have been clear. I mean, would it be possible to take a meeting off, for example, and then resume? Could you, rather than just doing at every meeting a move, go a little bit more slowly, take some gaps in between moves?
I mean, I think this is not something that the committee is thinking about or exploring in any kind of detail. In principle, though, we used to do was go every other meeting, if you remember, 25 basis points, and that was considered a fast pace. So I think a lot of options are available, and I mean, you saw what the Bank of Canada did, and they left it that they're willing to raise rates after pausing. But this is not something that the Federal Open Market Committee is on the point of deciding right now.
Steve Leisman, CNBC. Mr. Chairman, the SEP has the PCE inflation rate in 2023 at 3.1%. Meanwhile, the 3-month annualized PCE is 2.1%, and you've achieved this without going to your 5.1% funds rate, which is what you have penciled in for this year. And you've also achieved it without the 1 percentage point increase in the unemployment rate, which you have penciled in for this year.
Still.
I'm wondering if you've considered the idea of whether or not
this looks like
your
it wants to take
understanding
off
of the
more,
inflation
though.
dynamic may be wrong, and
Not getting much out of the
it's possible
premiums right
to
now.
achieve these things without raising rates that high.
Gotta keep an eye on
and
it.
also
Coming down a bit more.
without the surge in
Yeah.
unemployment. And specifically, I wonder if you might comment on the speech given by Vice Chair Lael Brainerd, who said, to the extent that inputs other than wages may be responsible in part for important price increases for some non-housing services, an unwinding of these factors. In other words, it may not be wages, the idea that it may not require unemployment rising to get this sector of inflation under control. Thanks.
So a couple things. First, on the forecast, you're right. If you take very short-term, three-month, say, measures of PCE, core PCE inflation, they're quite low right now. But that's because that's driven by significantly negative readings from goods inflation. Most forecasters would think that the significantly negative readings will be transitory, and that goods inflation will move up fairly soon back up to its longer run trend of something around 0, something like that. So a lot of forecasts would call for core PCE to go back up to 4% by the middle of the year, for example. So that's really where the sustainable level is more like at 4%. So that would suggest there's work left to do. Let's say inflation does come down much faster than we expect, which is possible. As I mentioned, obviously our policy is data dependent. We would take that into account. In terms of the core non-housing services, as I mentioned earlier, it's a very diverse sector, 6 or 7 sectors, and so sectors that represent 55 or 60% of that subsectors of that sector we think are sensitive to slack in the economy, sensitive to the labor market in a way. But some of the other sectors are not. And for example, financial services is a big sector that's really not driven by labor markets, wages. So that's why I said there are a number of things that will affect. Take restaurants, right? So clearly labor is important for restaurants, but so are food prices. And transportation services is going to be driven by,
Not a good time to call.
Fuel prices, for example. So there are lots of things in that mix that will drive inflation. I would say overall, though, my own view would be that you're not going to have a sustainable return to 2% inflation in that sector without a better balance in the labor market. And I don't know what that will require in terms of increased unemployment, your question. I do think there are a number of dimensions through which the labor market can soften. And so far, we've got, as I mentioned, in goods, we have inflation moving down without the softening in the labor market. I think most forecasters would say that unemployment will probably rise a bit from here, but I continue to think that there's a path to getting inflation back down to 2% without a really significant economic decline or a significant increase in unemployment. And that's because the setting we're in is quite different. The inflation that we originally got was very much a collision between very strong demand and hard supply constraints, not something that you really have seen in prior business cycles. And so now we see goods inflation coming down for the reasons we thought, and we understand why housing inflation will come down. And I think a story will emerge on the non-housing services.
Coming back short on Apple again.
But I think there's ongoing disinflation, and we don't yet see weakening in the labor market. So we'll have to see.
About the 130 puts,
certainly
for
possible.
for February 17th.
It's a
Very
question
cheap, very cheap,
no one
very
really
cheap.
knows. I think it's because this is
On the
this
small
is not
account,
like
on the
other
big
business
account,
cycles
probably
in
gonna
so
buy
many
same
ways.
strike, but I'm gonna
It
go
may well
for.
be, that that it will take more slowing than we expect, than I expect, to get inflation down to 2%. But I don't. That's not my base case. My base case is
I'm gonna buy one of the
that,
140s. Look
the
to sell
economy
tomorrow.
can return to 2% inflation without a
And
really
then
significant
I'm gonna hold
downturn
the
or a really
130.
big increase in unemployment. I think that's a possible outcome. I think many
buy a few of
forecasters would
these.
say
Buy a few of these
it's not the
140s.
most
I'm gonna
likely outcome,
buy
but
a
I would
batch
say
of the
there's a
135s
chance of
to
it.
hold as well. And then you know what?
Michael McKee from Bloomberg TV and Radio. I'd like to pick up on what you were just saying about a
even-
substantial downturn and ask with the full
This is
rate
just like,
you're tightening.
I think
not
we're,
in place
like,
yet,
we could
and,
see a squeeze.
With the
I-
progress against inflation, there's still.
I think it's possible that we
very,
see.
very slow growth going forward in
Maybe even
2023.
further upside
And
here.
The recession indicators are
If
also
it wants to squeeze,
that
squeeze.
We are going to see recession
You could
this year,
squeeze
so I'm
here.
wondering
You
if
could squeeze.
you've
I wouldn't.
changed your
I wouldn't
view,
freak
or
out
You have a more nuanced view of what you
over a
think
squeeze right here.
danger
Squeeze
to,
my shop and my
economic
Tesla
growth
higher. That's
is
fine.
going forward,
Do you want to
and
squeeze me
whether
out of
you're
some of these shorts?
very close to,
Do it.
Perhaps
I
tipping
invite
you
it.
into the wrong place, which calls for more restraint on your part.
I
So
invite
do
it.
think most forecasts and my own.
I will say these
assessment
premiums
would
are
be
doing
that,
wild stuff right
growth will
now.
continue. Positive growth will continue, but at a
But
subdued.
I don't think many people came in that short into this, and I think that explosion up was people getting out. So I don't think you got much more room to squeeze, to be honest.
About 1%. I think.
I don't. I didn't see a lot of put
My
buying.
assessment would be that
In fact,
growth
a lot of
will continue
people
at a fairly,
panicking.
subdued level this year.
So I mean, if it wants to squeeze, it can squeeze. I'll be fine. We're below 19 RSI. We're in 18s now. 1847 on the VIX.
And that will matter for us potentially.
Yeah, I don't think you're gonna. I'm not talking about like you're not squeezing day traders at this point.
Job creation.
If you're squeezing
as inflation
people with
goes
large
down, sentiment
ongoing short positions at this point.
also,
Yeah.
state and local governments are
No, and that first drop down.
money, and many of them are considering tax cuts or even sending checks.
Very tight. Good time to get down. I even got out a little bit early because I was a little anxious about it.
And public, and so that's going to support.
Still ended up getting 100% on some of those contracts. Got some great exits on some of the short
Those
positions.
factors will help support positive.
I'm still coming in short
I've
on
hardly-
Apple here right now, though. I mean, I can't. I'd have to be an idiot not to kind of reset some of these Apple
I've
shorts
hardly
here.
touched anything.
Thank you.
I've hardly traded this at all. Like a few tiny little things, and it's just like
Second off,
massive volatility contraction here,
you said
which is good.
substantially.
Yeah, because if you're watching the stream and you're not aware, New Trader's mostly an option seller, so he wants your premiums to get slaughtered. He's actually the worst person ever. We don't like him.
Inflation data, or do you
Um,
have to see, the labor market coming
That's
back
fair.
a better
He's
pace?
hoping you lose.
Substantially more evidence,
So I don't think there's going to be a light switch flipped or anything like that. I think it's
Because if
just
you lose, he wins.
Well, I can tell you with 100% certainty that anybody that has been carrying puts through this is getting myrtleized today. If you're
Oh,
long
they're
puts
getting
through this-
slaughtered. If you held your, unless you got out
and
like I did near the lows there. Look at this go to 114.
wage report, which, as you know,
It wants to
is
kill me on
a
these short
report that
term.
We like because
Contracts
it adjusts for
even.
composition.
I'm still
It's
holding
very
these.
Complete. And the one we got, I guess it
still
was
holding
yesterday, was constructive. It shows wages coming down, but
74
still at a high level. They're still
1 hour, so
at
that's
a level
69.
that's
This
way
could
above
touch.
what-
This
well
could
above
touch
what- before
114
the,
or 314
before the
or 414.
pandemic.
Jeez, holy!
I don't want to put a number on it in terms
First
of
time
months,
talking.
but
Give me a
as
moment.
the accumulated evidence comes in,
Brain is
it's going
computing.
to be reflected in our assessment of the outlook, and that will be reflected in our policy over time. But I will say though, it is our job to restore price stability and achieve 2% inflation for the benefit of the American public. We're not.
This still doesn't look good on the
Democrats have a
TTM
very
squeeze though.
different job. And it's a fine job. It's a great job. In fact, I did that job for years. But in one form or another. But, we have to deliver that.
Take this,
And
retrace
so
this move. It looks like
we
407 is coming
are
up.
strongly resolved that we will, complete this task because we think it has benefits that will, support
If it's
economic
done.
activity and benefit the public for many, many years.
5 minutes still hasn't rolled over.
Thank you, Michelle. Thank you, Fed Chairman, for taking the
15
question.
still hasn't rolled
So
over.
you've talked about we had solid
30 rolled
job
over,
growth,
but it looks like it's
everyone's
come
Fox
back
business,
up.
by the way. We had solid job growth, a slight falling in the increase in consumer spending. It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to 6.5% CPI inflation. Is the hard part yet to come to go from 6.5 to 2?
I don't think we know, honestly. So we, of course, expected goods inflation to start coming down by the end of 2021. And it didn't. It didn't come down all through 22. And now it's coming down, and it's coming down pretty fast. So I would say this is not a standard business cycle where you can look at the last 10 times there was a global pandemic and we shut the economy down and Congress did what it did and we did what we did. It's unique. So I think certainty is just
Chop one
not
of the
appropriate.
few stocks to not
Inflation,
reclaim a new
it's just
high.
harder to forecast inflation. It may come down faster. It may take longer to come down. And, our job is to deliver inflation back to target, and we will do that. But I think we're going to be cautious about declaring victory and, sending signals that we think that the game is won, because we've got a long way to go. It's the early stages of disinflation, and it's most welcome to be able to say that we are now in disinflation. But that's great, but we just see that it has to spread through the economy and that it's going to take some time. That's all.
How long do you see then the federal funds rate remaining at this elevated level?
So my forecast and that my
Baba
colleagues,
has
as you will see
earnings.
from the SEP.
Did they already
there
happen?
are many different forecasts, but generally it's a forecast of slower growth, some softening in labor market conditions, and inflation moving down steadily, but not quickly. And in that case, if the economy performs broadly in line with those expectations, it will not be appropriate to cut rates this year, to loosen policy this year. Of course, other people have forecasts with inflation coming down much faster. That's a different thing. If that happens, if inflation comes down much faster, then we'll be seeing that, and it will be incorporated into our thinking about policy.
Simon.
Oh, wow. Noob, did you see the dollar futures?
I may ask a further question about the language around ongoing increases.
Glad I closed that nail. Look at nail. Look at the home builders.
If you look at Fed Fund futures prices,
No, I saw gold is taking off and silver is rallying hard.
Are you concerned?
So I can only imagine what the dollar futures are doing.
Dollar futures melted down. Bottom of 101.
Yep, that makes.
I'm not
makes
concerned.
I mean, that's a pretty big plunge through.
Largely due to the
Where we've been
market's
seeing a lot of
expectation that
consolidation.
inflation will move down more quickly. I
Look
think
at that. That's a big
It's been the
move.
trade of the year is like short dollar.
Yeah.
So again, as I just mentioned, our forecasts, they're different participants have different forecasts, but generally.
Look at this. This is what I'm talking about when I said we could see a squeeze higher. This is people that are unwinding long-term short positions here.
We have inflation
Yeah.
moving down.
I mean, it's catching me off guard.
Somewhere in the mid threes or maybe lower than that this
On
year.
how big this move truly is.
I thought in December. Markets are.
I mean, it's fine though. I mean, Tesla, you could go to 200. You could squeeze the shit out of everyone. That's fine. Murder all my SPY puts if you're gonna send Tesla higher. It's a fair trade.
I'm getting murdered in my S&P position because it's relatively short here, but all my other positions are just like.
That'll play into our policy saying, of course.
Yeah, it's okay.
Even uranium's getting some moves.
Hi, Chair Powell. Scott Horsley from NPR. One of the changes in the statement this month is that the committee is no longer listing public health as among the data points you'll consider.
I'm muting you or myself again.
TLT's.
Reserve no longer see the pandemic as
Look at TLT climb past 8. Oh, a bunch of my TLT contracts came back too. That is
we understand
gorgeous.
That COVID is still out there, but that it's no longer playing an.
Whoa, that is A-okay.
And we kept that statement in there for for quite a while, and I think we knew we would take it out at some
I
point.
can close some more of these UAAs probably
But
here
we thought
soon.
that, people are handling it better, and the economy and the society are handling it better now. It doesn't really need to be in in the Fed's.
We're gonna go higher.
Or meet.
I'm not closing the UAAs. I'm leaving them on for like a month.
A health issue.
Nancy.
If we get a big pop in UA,
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Wanted to go back to another thing that Fed Vice Chair Lael Brainerd said recently. She said she doesn't see signs of a wage.
I mean, I'm in the money on these.
spiral. And I'm wondering if you agree with
I had the
that.
12.5s out in April.
I do. You don't see that yet, but the whole point is, once you see it, you have a serious problem. That means that effectively in people's decisions.
I'm gonna take some more of these
inflation has
off, just
become
take
a
my
really salient
profits.
issue.
Should've gone.
And once
Should've
that
gone.
happens,
Should've had a time frame on those, honestly. Probably could have bought the Marches.
So that's why we worry that the longer.
No, I could have.
Talking about inflation all day long, every day.
I see why I set it up this way. There's no liquidity anywhere.
Not much. It's more of a risk. It always has been more of a risk than anything else. By the way, I think it's becoming less salient, and people are. We pick that up in conversations, and I've seen some data too.
That's why I did that.
Gradually, they're glad that inflation's coming down. People really don't like inflation, and as we see it coming down.
People really don't like inflation. Is that right, Paul?
You look at the sentiment surveys now, and they're very, very low, with 3.5%.
Heavy sarcasm.
And high wage increases nominally by historical standards. Why can that be? It has to be inflation, right? So I think once inflation is seen to be coming down in coming months, even you will also see a boost to sentiment, I hope.
So that's what you're looking at most closely is consumer expectations.
That's at the very heart. It's consumers and businesses that essentially we believe that expectations of future inflation are a very important part of the process of creating inflation. That's a sort of a bedrock belief. In one way or another, it has to be. We think it's important. And in this case, I would say the risk 8 months ago or so, longer-term inflation expectations had moved up. We moved quite vigorously last year. Expectations seem to be well anchored, including at the shorter end now, not just the longer end. So it's, and I think that's very reassuring. I think, the markets have decided and the public has decided that inflation is going to come back down to 2%, and it's just a matter of us following through. That's immeasurably helpful to the process of getting inflation down. The fact that people now do generally believe that it will come down, that'll be part of the process of getting it down, and it's a very positive thing.
Thank you, Chair Powell. Greg Robb from Market Watch. In the minutes of the December meeting, there was a couple sentences that struck people as important. When the committee said participants talked about this unwarranted easing of financial conditions was a risk, and it would make your life harder to bring inflation down. I haven't heard you talk much about that today or in the statement, so I was wondering, has that concern eased among members, or is that still something you're concerned about? Thank you.
I would put it this way, it's something that we monitor carefully. Financial conditions didn't really change much from the December meeting to now. They mostly went sideways or up and down, but came out in roughly the same place. It's important that the markets do reflect the tightening that we're putting in place. As we've discussed a couple times here, there's a difference in perspective by some market measures on how fast inflation will come down. We're just going to have to see. I'm not going to try to persuade people to have a different forecast. But our forecast is that it will take some time and some patience, and that we'll need to keep rates higher for longer. But we'll see.
Let's go to Brendan for the last question.
Hi, Chair Powell. Brendan Peterson with Punchbowl News. I wanted to ask if the Fed takes into account at all the debt ceiling when it comes to quantitative tightening, given the fact that rapid or faster quantitative tightening could bring us closer, faster to that drop-dead debt ceiling deadline. Could it play an effect as we get closer to that drop-dead deadline this summer?
It's very hard to think about all the different possible ramifications. And I think the answer is basically, I don't think there's likely to be any important interaction between the two, because I believe Congress will wind up acting, and as it will and must in the end, to raise the debt ceiling in a way that doesn't risk, the progress we're making against inflation and the economy and the financial sector. I believe that will happen. I believe it will happen. We of course will monitor money market conditions carefully as the process moves on. For example, the Treasury General account will shrink down and then it will grow back up, and we understand there'll be lots of flows between there and the overnight repo facility and reserves. We understand all that, and we're watching it carefully. We'll just be monitoring it. Thank you very much.
And that's it for Pally Boy. For Pally Wally. No, can't have the music. Sorry, I missed all those comments. All right, I'll keep those in mind for next stream. Oh, this is so hard to see. I should have been like super zoomed into this. All right, let's drag this over here. You could very easily see this test right here. Tentacles are still rolling over. There's potential for consolidation here and then a push up. We came in short here, but we also set up those Tesla calls. Those Tesla calls are printing so much harder than the SPY puts are getting murdered, so it's great. I'm also in shop, but it's getting a little bit of pullback here. There's time in all of these, though. I have time in Tesla. I have time in shop. And I don't like Meta right now. I think Meta's about to turn over. And we can see it turning over on the daily. That might be another short position I can play against my aggressive calls. Yeah, we'll see if this can test. It doesn't look like it's going too well, though. All over there. What's this look like? Still running a little hot. I mean, honestly, a lot of this momentum's still here. Yeah, you can push higher. You could do it. If you wanted to do it, Mr. Market, you could do it. Still keeping a lot of put positions open. I'm not bullish about Apple earnings. Like the big sell-off heading into Apple earnings. I think there's very clearly a reason why Apple is out underperforming SPY and not in trend. I think it's because of their earnings tomorrow. I would not be surprised to see another down day tomorrow in anticipation of that. You got a play set up on Apple, noob? I think we lost our other trader. We did lose our other trader. We got some comments from Joe. Joe says he's out of UNG at 750. Okay, now let's look at some of these questions. Someone asked about Rum, which is Rumble. It's $10 right now. First thing we'll take note of is March 1st, you have earnings 64 there. What a weird chart. There is nothing to see here on the Elliott waves. This is nothing. it's rolling over on the daily. It's not usually a good sign. The weekly's not going to really tell us anything. This hasn't existed long enough for this to even read anything. Utility, pretty much you could say the same thing about the daily at the 4 hour. We've been long enough. I can't even look at a 4 hour really. Kind of muted. Still bullish though. 30 minutes still bullish. Looks like it's rolling over. Could roll over here. Overall, not much momentum. The volatility looks like it's been coming down here. Let's look at our option chain. In the short term, this thing's not even priced to move a buck in either direction for the rest of the week. Pricing a lot of sideways chop. Same thing goes for the week after next. I mean, these contracts look. This is wonky. So this is weird. Your out the money puts are trading with, 100 to 200 implied volatility. Your calls only have 64%. I mean, these calls are cheap. If you're bullish and you want to buy calls, this is the time to do it. These 1150s, those are really cheap. You got almost no volume. The only thing you got volume on right here is going to be your your $12 contracts. $15 each. Ugh, everything here is so cheap. I'd be more tempted to buy these 10s, but I mean, get a $50 priced in for the next month. I think it could move more than that. Ugh, I would like this to give more signals before I bought more into it. I've been in Rubble. I am a Rubble holder. But I bought Rubble at $7. Excuse me. Right here, I don't see jack. I like where I'm at right now. I wouldn't buy more here. I don't really have much to say other than that. What was the other thing? Wasn't there another one? Hymns. I mean, I like Rumble's fundamentals. I just don't know if they'll be a true competitor to YouTube. Not in the short term. Not in the next year or so. YouTube's going to need to mess more things up. I mean, they've been on a good path to mess things up, though. With how crazy people are getting. What is Hymns? Give me a reminder of what Hymns is. That's right. Hims and Hers Health. Sex products. I'm just kidding. I don't think it's that. Shampoos. These are all outdated again. 10% shorts. Not the worst, but it is significant. Insiders have been selling. They still own 58% though. That's good. You want to see that. You want to see the people who run the company actually have their money where their mouth is. What am I trying to go to? I'm trying to go here. Okay. Let's look at the daily. Oh, this is kind of at a pivotal point. does that look like? Doesn't look like anything. Has this been around long enough for me to do a weekly chart? Not really.
Hello, sir.
Hello. Welcome back, matey.
What do we think here, huh?
I was catching
About
up
them.
on some some questions in the Discord. People are asking about some random stocks. Looked at Rumble, didn't see much there. There's some weird pricing on the Rumble contracts. Have you noticed that?
I have Rumble shares. I have not looked at them. They're in a different account. What's going on here? The contracts. I have contracts too. What contracts are you looking at?
I was looking at the calls. If you look at the implied volatility for the calls, about half of what the puts are at.
So there is. Oh, okay.
Yeah.
So we're. So it's skewed. Okay.
It's definitely skewed. And right now, I'm looking at HIMS. You ever looked at this stock?
There's not a lot of juice in the call.
Not at all.
Hims? Isn't that hair?
Yeah.
Like
I had to look it up on Finviz because for a second I thought it was sex toys.
I don't think so.
Yeah, definitely not.
Wow, look at where this thing has come from. $2.72.
Oh, we had a request to see the NVIDIA chart again. I'll tell you what, I'll screenshot this NVIDIA chart and the mess that it is right now. And if you're in the Discord, you can find it in the general chat.
What do you think about Hims?
Looking at it, I don't think anything. I don't know about. I don't have any fundamental analysis on the company. They'd have to dig into it. I think last time I looked at this company was potentially in 2020. Is that when it IPO'd actually?
I was thinking kind of similar things. I was just about to say, like, I'm not touching that.
Not IPO'd in 2019.
Yeah, it's relatively newer IPO, and it gotten myrtleized.
It's making a nice rebound from some lows last year, though.
Yeah,
What does
no,
this
absolutely.
look like? Show me the financials.
It's down on a day when the entire market is up, though.
Yeah,
Well,
which is
did it
pretty
have
bad.
earnings? I'm like, that alone is like, what's going on here? But maybe I had earnings or something. All right, so I'm looking for things to close. Don't know what else to do here. What's a good trader to do?
They do not look like on they need to scale more. This is just one of those stocks where they're still not profitable and the market's just gonna crap all over them because of it.
Look at Intel, man. This thing craps the bed on earnings, and now it's just like headed right on back up.
I thought, at this $25 low or something, this previous low, the low it had, I was like this could be a big winner in the long term. And since then, it's been a winner, but it's not a big one.
Yeah, I also got some longs and going on in there, and I was thinking similar things, and meh.
You know,
I'm buying some more Marvell stock here, kind of as a hedge. Just to keep some
MRVL,
positive.
right?
Yeah, just to keep my deltas in line.
What is that again?
I'm sorry. It's chip stock.
Okay. Not as acquainted with this one.
That's not necessarily. That's more of like a protection for myself than getting long. It's forcing me to buy more stock here, basically. Keep myself from being short. Uber as well is kind of squeezing me to the upside. Have to roll up. When does Uber have earnings? They already have earnings?
The 8th, February 8th.
Gotta roll my puts up in there. There's no juice left in this shitty stock. I should probably just get out of it.
In Uber? You play with shit I never
There's
touch.
like no juice left in here. It says it's got a 38 percentile IV, but like, ugh.
It's rolling over on the daily. I would be cautious of that. For sure. I mean, a lot
Little
of this
late.
stuff still is.
A little late. Already rolled. You just gotta be mechanical.
Tesla still looks. Tesla still Tesla.
Natural gas is still natural gas. Can't buy an uptick to save your life in there.
It's been good volume lately, though. Something's happening.
What do you do here in Roku? What do you think you do here in Roku?
Oh God!
Think you
You're gonna
just
make me
start
look
to
at
get-
Roku. You're gonna make me look at Roku.
Yeah, man.
I
This is
shouldn't say
juicy
that. There's
stuff.
probably a bunch of people on YouTube who are obsessed with Roku.
I'm obsessed with trading this stock. Like, there's juice in these premiums, like these in these options.
Really? Let me look at this.
And look at the 45 strikeout in March for the puts. It's $1.25. $15 away from the money. Probability of profit, you're looking at like an 80% probability of profit. Capital required to even sell the thing is like $400. You're looking at 25% return on your money with an 85% probability of profit.
I'm not gonna lie. I was doing technical stuff. I missed some of that, but I got the gist.
I was doing, what is it, hot girl shit.
You doing girl shit? That was a dad comment.
The only thing that's spanking me in the face today is the S&Ps and UNG and natural gas.
UNG spanking you? Did you get too big too fast?
No, it's not that painful. But yes, my position size is large in there. But
mine just got large
I mean,
just today.
UNG is down 10% today. It's a big move for commodity.
Yeah.
On the back of being down, like, you know, a lot.
A lot? Significant?
How do
Spanking?
I say this nicely? A lot.
Coin is even up 9%. Wait, what did Bitcoin do? I don't nothing really stands out to me on Roku. I mean, it looks like it could push higher on the
I
daily.
think I'm going to sell another contract.
To me, across the board, everything that looks like it's kind of rolling over. It doesn't look like we're done with the bullish trend, but it looks like we're gonna have a bit of rollover. Shopify is one of the few that looks like it's still gonna creep up more though. And that's about it. Oh, I have this on the wrong screen. Sorry. You can't see it. You can't see all the accounts. There you go, stream. You can look at that. I'm wanting to buy.
All right, so I just did another natural gas contract. I should probably slow down on those. That thing moves.
It bled 50% of my put. Bled 50% of my put. My Tesla position is 10 times what my put is, and it's up 25%. So, not even worried. My SPY put positions overall are down 60% though. The Tesla's still about 10 times as big as that. Let's look at some of these others. What are we looking at? We're looking at chop up, good amount. The bounce back in TLT was really nice. Some of these contracts were getting slaughtered. Still down overall, but the bounce back was just nice to see. These uranium positions are up beautifully today as well. I do love that. On my overall UNG position, I'm down 3.69%. This is going to touch 414. That's wild. Crazy. Let's go back to this account. All right.
This is nuts, man. My S&P position is just getting wacky pooed.
Your what position?
My futures.
I got a position for you.
My futures position in the S&Ps. It's getting rocked.
What do you have?
Now I'm short. I was relatively neutral, but on this move, I'm just getting murdered. I'm going to have to roll up to like the 4,100 short puts. I'm rolling my March contracts up 400 points. That's how much. That's how much I'm getting murdered.
Yeah, this does look like a full-blown squeeze now. That 414 might come in before the market close.
I don't even think I have anything left to roll up. Please stop hurting me.
I mean, VIX went below 18. How's the Discord doing? I haven't talked in here much today.
This is murder, is what this is. This should be illegal. Kids, turn your eyes away. I get filled on that? I don't even see it working. Come on.
You know what? Is that today? Is Meta earnings today?
What the heck just happened?
It is today. That might be one where I'm probably gonna play this. Whoops.
How did I just put a position in and it's like I didn't even happen. It's not even recognizing it. Like when I look at, you ever have that happen with toss?
What would toss?
I just put in an order to roll up puts and it doesn't even recognize that I did it. Like I got the confirmation sound, it went through. I'm not trying to get filled on the same order twice, but it's like it never even happened. Really kind of strange. Computer recognize. It's like, no, dude, there's no saving this. You might as well not even try. I'm just going to delete your order.
Sorry, I'm setting up.
It's an illegal price. That's why. Futures get weird like that. You have to do it in 25% intervals. Some of the order change the price.
What's my IV here? My IV here is.
Good grief. What's happening?
Okay, that's what I
Stop
want.
rallying.
All right. Stop it.
Keeps going up. I told you we could see this squeeze. This is what I was afraid of. This is brutal. If you're short, God love you.
But obviously, God doesn't if you're short.
You don't want to be short going into this. Holy crap. These are big players unwinding big short positions right here. And people just willing to take risk. I might run out of money here. Is that bad?
It's usually pretty bad.
It just means I gotta close out some positions. It's not bad when your P&L is going up and you're running out of money, right?
If P&L is going up, but you're running out of money, that means
because the way that
that means you're over
future,
trading and you're about to get blown out horribly.
No, it's the way that the futures margin. It's the way futures margins work. So like my futures.
I'm kidding.
Position requires. Like the more this goes up in the S&P, these futures short contracts that I have on in the S&P just require more and more and more capital. Even though all my offsetting positions are making way more money than I'm losing in the S&Ps, it just the capital requirement is like exponentially increasing.
Yeah.
Which means I'm gonna have to start closing some stuff here. like it here.
All right, I'm going to take some of these Teslas off. Lock some of this in. I mean, wow. What a great day, though. I mean, damn.
Yeah, it's hard to be mad at this. I'm also taking off positions here.
Yeah, I mean, what a great freaking day. Sweet.
Yeah, I'm closing out a decent amount.
Oh. This is what makes streaming hard for me. Sitting here and just talking the whole time. I usually got to get up and walk a bit. I got to get up and walk a bit, stream. Dude Trader is going to talk about something for the next few minutes. And I'm going to go do some stretches. And pee. I can't believe home builders are up 8.3%. All right, one second. I'll be right back.
Ooh, aren't you short that? How's that working?
I got out of that short.
That's good. I'm getting out of the majority of my Roku position here. And I'm filled. So I only have a few contracts left in Roku. Roblox I already closed out. Shop, I am going to, what am I doing in Shop? I'm going to take off 1/3 of my shop position. Why is shop not filling? Can't get out of mid. Okay, take her up. Out. Anytime you have an amazing day, it would behoove you to remove risk. That is what I'm doing. Intel. I'm actually going to take my calls expiring in February, my short calls, and roll them out to March. We're going to keep the dream alive and live to fight another day in Intel, hopefully. Build. My puts in Intel, my short puts, I'm actually going to roll from February to March as well. So we're going to buy back that 29 puts. Feb, sell them in March for a credit 37 cents. And then we're going to take the 30 puts, or no, yes, 30. We're going to buy those back, and we're also going to roll them to the 29 puts. So we're taking $100 in risk off the table. We're doing that for a debit of $22, but the overall, so I removed $100 in risk and received a credit of $30-something and paid a debit of $20-something. So net, it was for a credit, and we removed risk. Intel now looks good. Every time we ratchet things down, we're also freeing up buying power. I'm going to take off a third of my position in Affirm as well. Yeah, we're going to close two of these, buy two of these back. Two of them. Short the 20 calls. They're getting murdered today being short them, but I'm also, I have a ratio where I'm short way more puts in there than I am calls. The puts are doing phenomenally well. Calls are getting rocked. We're going to buy back a third of these. Not getting filled. Why are we not getting filled? All right, we're going to pay up a penny. All right, we're still not getting filled. You're going to make me pay up 2 cents. That's not cool, man. All right, so we're out a third of that. Also going to buy back one of these 23 short calls in Affirm. To keep my ratios even. All right, we've reduced size in there. AI, I really can't reduce my size in there because it's already a small position. Amazon. Actually just gonna sell this call that's part of a spread and turn it into a naked short position.
Yeah, get naked.
Get naked. So I was short a call spread against like a naked short put, and
Yeah.
my long call was it was a 115, 120 short call spread. There wasn't a lot of juice left in it, but on this pop today, we're just gonna sell back the long 120 call and leave the short 115 call. And that's against a 95 short naked put. So now it's a 95 115 short straddle. They have earnings coming up. ARK. What are you doing, ARK? ARK is kind of at this point just like a surrogate for Tesla. It pretty much behaves exactly like Tesla. Pretty bad when weed can't even buy an up bid on like a massive squeeze to the upside in the market. Oh, look at that. We're coming back down.
Yeah.
You see that?
Oh yeah, I'm watching my puts
Now
come
notice
back to life. Those short-term SPY puts, they got air. They can breathe.
Hold me close.
We denied
America.
we denied a touch on that 414. It got close. It tried to make a push for it. We're pulling back. I mean, on the 1 minute, we're actually really bearish here. Rolled all the way over into tomorrow. A lot's gonna matter with what Meta does. If you're in the oh, I didn't post this in the Discord. I'm gonna post in the Discord. I set up. I didn't post a lot of stuff going on in the Discord. Sorry, Discord members. If I'm live streaming on YouTube, it's hard for me to manage all this, answer questions, and post everything I'm doing, especially on these short-term plays, which is why I don't often live stream anymore. But I set up Meta. And then I got multiple expirations, but let's go for this small one. That was the 224.
Is earnings today, now that we're 5 minutes away from the closing bell? Shoot. I didn't look. Earnings, I'm trying to see if any popular things have earnings that I need to close. Netgear, is that today? Am I on today? Yeah. Meta does have earnings.
Yeah.
Um,
Thanks for catching up.
do I I got too much shit going on. Shoot, I think I have a short strangle in Meta. 110, 185. Ew. That's closer than you'd like. I'm going to cover that. I don't want to take that through earnings. I'm glad we had this talk. Just my luck. Meta's already throat punched me last year in these massive down moves. I don't need to get destroyed in that again. In naked short into earnings. Premium. Come on, Phil. There we go. I was gonna say, what's in the markets at Meta? What else? What else has earnings? Aftermarket, anything else? Aflac. Don't see anything. What about in the morning? Is that it? Is it just Meta?
I don't know. I'd have to look.
Not seeing anything in the morning. Nothing super liquid that everybody trades anyway. Nope, I see nothing.
Yeah. Same.
Natural gas just smacked the crap out of me today. Well played, sir. Well played.
Oh, Peloton had earnings this morning? How'd that go?
I gotta take my silver
This company's still in
futures and
business?
roll
In
them.
fact, earnings seem to go well for them.
Where does one roll their silver futures to? The 22? Yeah, we'll roll up
Bitcoin.
to 22.
Roll all that right into Bitcoin.
No, I'm saying I'm short. I'm short. Never mind.
That's where you roll it to.
Straight into Bitcoin. Come on, Phil. Making me work for it.
I guess at this point we go ahead and just I'll stay live for initial Facebook. Actually, when's the actual Facebook Meta earnings call time? What time is the Meta earnings call? I should eventually do a live stream where I just listen to an earnings call and then show people like, what do you listen for? But I should probably do it on a company I follow a little bit. I do follow Meta pretty well though. I should sell some of this stock into this earnings, but I'm not going to. Should take some risk off here, sell at least 10%. Interesting. Okay, I just want the time. It's 5 p.m. I'm not streaming for another 2 hours. I'm already got too many things I gotta do. And we gotta do a weekly report, which will probably be out kind of late tonight. Because I have some obligations with Milady that I have to attend to. So that report will probably be out about 5 hours from now. And we're going to see if my brain puts together any more thoughts. Probably just going to talk about what's going on here. Talk about Apple earnings. Probably won't do a refresher on Shop. Probably go over this stuff on UNG. I'll do a little reminder of what I talked about at the beginning of this live stream. So hope you enjoyed. Thank you for everyone for hanging out in the live stream. Appreciate it. We got 1 like on the live stream. Let's go. I know there was a lot more than just one of you at one point.
All right.
But hey, it's much appreciated. Anyways.
Market is closed.
Market is closed. I'm ending the live.